Welcome to Healthcare Entrepreneur Academy, where we seek to educate, motivate, and inspire professionals into starting their own healthcare businesses. Learn from leading healthcare entrepreneurs and other business experts as they share their journey and provide a glimpse into their playbooks for success. Loaded with valuable insights and actionable strategies, this show will guide you on your path to freedom. Now, please welcome your host, entrepreneur, healthcare practitioner, and MBA, Jason Duprat.
Hey everybody, welcome back to the Healthcare Entrepreneur Academy podcast. Super pumped today because we have some really awesome information for you. We have Sandy Botkin, who is a CPA and attorney. He has authored 2 books, including Lower Your Taxes Big Time and Achieve Financial Freedom Big Time. Currently, he's the tax director of TaxBot, an expense and mileage tracking application. He's the CEO and principal lecturer of the Tax Reduction Institute. And over the past 20 plus years, he's taught thousands of taxpayers how to save millions on their taxes. Prior to joining the Tax Reduction Institute, Sandy spent 3 years in the tax department of an international accounting firm, and Sandy formerly trained IRS attorneys in its corporate tax division. So awesome, Sandy. I'm super excited to have you. Thank you so much for taking the time to join us. I know you have a lot to share as it relates to the Small Business Relief Act. If you can, just fill in any gaps I left on your intro, and we can start talking about the CARES Act.
No problem. First of all, I want to tell you how honored I am to be here with you. I've heard a lot about you, and I've always wanted to be on your program here. But I'm also very honored to be speaking to anybody who's self-employed or has a business. My parents were self-employed. I'm self-employed, and I've always had a lot of respect for anyone who's willing to take a little more risk in order to make a lot more money. So really, I have a lot of respect for all of you.
Awesome.
Okay. Let's get moving. This is a very content or a program here. So you may want to take some notes. The good news is that you're going to also receive a recording. Now, I'm an ex-New Yorker, so I can go at 60 miles an hour with 120 mile an hour breeze. So I'm really going to move. But as I said, you are going to get the recording of this. So that's going to help you out a lot. Also, I'm a former trainer of IRS attorneys nationwide. In fact, I can have a picture of myself. I was told this picture's a lot better looking than I am, by the way. I'm a CPA. I'm a tax attorney. I'm a lecturer. I'm tax director of, as Jason said, of TaxBot, which is an expense and mileage tracking program that I think you're going to like a lot. I'm a best-selling author. I'm a book of several books that I recommend to you. One is a book called Lower Your Taxes Big Time. Let's see if we can get this in the picture. Lower Your Taxes Big Time, which I recommend to all of you. And it deals with all kinds of things and how to write off the equivalent of your kids' education and weddings and what kind of pension plan to set up and all kinds of other stuff. The second book, which I recommend to you, is Achieve Financial Freedom Big Time. And this deals with estate planning and probate and asset protection and how to cut costs when you're in a situation like this and so on. I recommend both books to you. And I'm also a tax director, as I mentioned, of TaxBot, where we have a whole coaching service. And I'll tell you a little bit about that later on, and does a lot of other things for you. Okay, I think we can get started. Let's start off with this stimulus package that you read about. There's actually 3 of them, all right? Normally, when they change the tax law, they usually make it just for the rich or just for the poor. This one is very middle class and upper middle class targeted. And it's very pro small business and independent contractor. Many people think, well, this only applies to small business. I'm just an independent contractor. It applies to you in almost every way. So I want to make that really clear, okay? In many cases, you'll be almost as well off as you were before things started going south on you. So you should be very much aware of all the little things that are going on with this stimulus bill, all right? All right, I'm going to go into a variety of different things we'll talk about. The first thing applies to almost anyone in the country, and that's the stimulus that you probably read about. And there's a huge benefit here. If you are, whether you're single, married, whether you are currently in business, not in business, laid people off, didn't lay people off, you are still eligible for the stimulus. Now, the stimulus, the amount is $1,200 per person. So it's $1,200 for you, $1,200 for your spouse, plus $500 for each dependent child. Now, what Congress giveth, they taketh away. This is not designed for people who are successful. This is designed for the people that are suffering or in the lower incomes. If you are single, to get this stimulus, if you are single, you have to make under 75,000 of adjusted gross earnings. If you are married, then you have to make under 150,000 of adjusted gross earnings. Now it slowly goes up. If you make between 75 and 99,000 and single, you get a partial check. If you make over 99,000 of adjusted gross and you're single, you get no check. If you make between 150,000 of adjusted gross earnings and are married, between that and 198,000, you'll get a partial check, as you can see here on the screen. If you make over 198,000, you don't get a check. Now, how do they determine what your adjusted gross earnings are? Here's the key. It's based on your last filed tax return. So if you didn't file your 2019 return, you then have 2018, which is what they'll go to. Now, here is the interesting point. Some of you, and I know some of you have been laid off, especially if you're dealing with elective surgery and things like this. There's a lot of hospitals that have been laying off people that don't deal directly with emergencies like life-saving things and the coronavirus situation. If you think you're going to make a lot less money in 2019, when you file that 2019 tax return, if you fall within these rules, you'll be able to qualify. In addition, if for some reason you don't get a check, and things happen, this is the government here, you can then take a credit if you meet these rules on your 2020 tax return and reduce your taxes by this amount. So be aware of that. Now, this is actually one of the smaller benefits. All right. There are various types of things. We broke it down into various categories. One of the categories, the first category that we broke it down to is what I call can't work money. This is where you can't work because you're sick, or you can't work because you're taking care of someone else who's sick. But there's also a benefit called the family leave credit, where you can't work because your kids are no longer in school. School closed down, or they don't have childcare. The childcare closed down. All of those circumstances allow you to receive some form of can't work money, some kind of stimulus money. So what is this? Okay. If you can't work because you are sick, an employer gets a tax credit if they pay you of up to $511 a day for a maximum of 10 days. If you can't work because you're taking care of a child who is no longer has school open or doesn't have childcare, then you get a maximum of $200 a day, but that goes up to 50 days. Now you might say, well, I'm self-employed. I don't have an employer. No problem. Because if you're self-employed and you have this situation where either you're sick or you're taking care of someone who's sick, you can get up to a $511 a day tax credit. If you are taking care of a family member, like your kids lost their child care situation, you get up to $200 a day tax credit. This is called can't work money. And that's one of the things that come in under the subsidy law. Mm-hmm. Now, second type of can't work money, which also applies to self-employed independent contractors, is something called the Paycheck Protection Plan. Now, this is a really, really cool thing. Now, what's the Paycheck? And we're going to get into this one, by the way. This is coming up. But there's a third thing for can't work money. And this is, I want to point this out before we move on to the Paycheck Protection Plan. And that is unemployment. Normally, if you're laid off from a hospital or you're temporarily furloughed or you're making a lot less money because of a variety of different things, unemployment is normally a state-funded thing, and they give you up to $400. It's roughly 40% of what you're making. And if you're making a lot of money, it's probably a lot less than that. Well, the government is funding this now, and they've raised the weekly unemployment by $600. And they've raised it for 4 months. So if you find you have been furloughed, you can go in, get unemployment, and collect. Now it's probably closer to about $1,000 a week. It may not be equal to what you were making at the hospital, but it beats a stick in the eye. And this applies whether you're self-employed. Let's say you were laid off, you were an independent contractor, you were laid off, or you had to close your business because no one's coming anymore, because I just had that with my allergist. You have to close down. This applies to employees. This applies to all of those people. So even self-employed people, independent contractors, can go and get unemployment. Make sure you keep that in mind. Okay, let's continue with this can't work money. Now, one of the interesting aspects is we talked about this Payroll Protection Plan. Let me see if this is where I want to be here. Yes, this Payroll Protection Plan It's a really interesting plan. And I want to emphasize what this is. And it works not only for anybody who's got a business, which includes independent contractors. Okay. The Payroll Protection Plan's goal is basically to keep paying your employees. Essentially, the government is covering your payroll, but it's more than just payroll. It covers payroll for 2.5 months. That's the catch. It's 2.5 months. Rent, mortgage interest, and utilities. Payroll, rent, mortgage interest, and utilities. When you borrow the money, and that you get interest rates, and you have to have some payroll between January and February 29th. It gives you interest rate of 4%. You can get an expedited payroll. Now, what's very interesting about this is if you apply for this, and this you have to go to any bank. People ask, well, where do I go? Any FDIC approved bank. If that bank doesn't know much about it or they're not doing it, just find another bank and call them up. There's like $350 billion allocated to this. So this applies to small business people of under 500 employees. So, and it also applies to you if you're self-employed. Okay. So if you're for some reason not doing the business, you have to close down your practice, you got laid off from the hospital. Hey, this applies to you. Now, a couple other things here besides payroll. And by the way, payroll includes net income from your business up to $100,000. So it's not going to cover you for more than $100,000 a year of payroll. And that's prorated for 2.5 months. So whatever that is, it's 1/6, a little over 1/6 of 100,000. So be aware of it only covers payroll up to wages up to 100,000 per employee. Okay. Now, what's interesting about this is that if you use the money to cover you for the net income that you lost, or cover you for the wages and the rents and the things that it's for, then after 8 weeks, when you finish that 2.5 month period, all of this money is forgiven. It is free money. You never have to pay it back. It's gone. Now, if you want to borrow more than this amount, or the amount that you don't use for payroll, then you will have to pay it back at 4%. But if you use all the money for the payroll, which is exactly what it's for mortgage interest on a property you own, or commercial loan interest, utilities, things like that, rent, and it's all used for that, you prove to the bank that that's what you use the money for, you will not have to pay it back. It is forgiven. I want to emphasize that, okay? These are called payroll protection loans. Great things you need to go to a bank for. That's the only problem. It's not hard. It's a very simple form, okay? Another change in the law, payroll taxes, especially if you've got a bunch of nurses or assistants in your office. You got payroll taxes. Well, the government's given you a delay in having to pay those payroll taxes. Normally, they're all owed by December 31st of this year. But now you can pay 50% of that the end of 2021, and then the other 50% at the end of 2022. So effectively, you're getting at least a year to 2 year delay in payroll taxes. So be aware of that. You can talk about that with your accountant or your manager, but you want to be aware of this. Now, this is something else that's very cool, and this is called Sba Loan Money. This is an economic injury disaster loan. We call it EIDL, but it stands for Economic Injury Disaster Loan. And I like this. You're going to like this too. You're going to be able to get $10,000 of free money, okay? Totally tax-free. Now, what is an economic injury disaster loan? What's good about this particular thing is that you don't have to go to a bank. This one, you go on the SBA website. You can do it in your pajamas. You don't have to go anywhere. And you apply for the economic injury. As you go on the SBA website, sba.gov, you'll take a look. It'll talk about economic injury disaster loans or disaster loans. You apply for that. Now, you don't want the loan. I mean, I guess if you want the loan, you can get it. You can go up to $2 million. You can pay. It gives you a 3.75% interest rate. But you really are not doing this for the loan. It's going to ask you, do you want an advance payment? You want to say yes. By getting an advance payment, then you've got to be either self-employed, an independent contractor, and have suffered in some way as a result of the coronavirus situation. You can get $10,000 of advance payment. Now, here's the interesting thing. It is free money. You do not have to pay it back. It is free. It is forgiven. You pay nothing. That's what you want to go here for. You want to get that advance payment. I wouldn't go there for the loan. The personal protection plan is much better from a loan perspective. But this is for the advance payment, and it'll give you $10,000. And you don't have to do anything. You just go on the SBA website. I mean, it's for a half hour of your time, you'll make $10,000. It's not a bad deal, tax-free. All right? Now, let me give you a catch here. They've only allocated $10 billion to this plan. $10 billion. Now, you might think that's a lot of money, but the problem is if you take the mathematics and you do a little calculator here, you take 10 billion, you divide by 10,000. That means that only the first million people who apply for this will get this $10,000 grant, in a sense. Well, there are 45 million independent contractors and small businesses in this country, which means you gotta move fast. Fast means today, okay? Maybe Monday. I'm not even sure it's even going to be around Monday, but you gotta move fast. This is not one of those things you want to sit on your fingers on, okay? Now, I will mention that if you get this loan, it integrates with the small business, with the payroll protection loan. So you won't get as much from the payroll protection loan. But so what? You get this $10,000 advance payment. It's $10,000. I would absolutely go for this, okay? If you don't want the payroll protection because you don't have employees, you're an independent contractor, you don't need the payroll protection that much, and you're still working, then maybe this is fine. If you're not working, then sure, you want the payroll protection plan. But I want to emphasize this applies not only to those of you who are incorporated, this applies to those of you who are self-employed business, even independent contractors. Everybody gets this as part of the stimulus money. All right, let's keep going. Let's assume now you have a business and your business has been greatly affected. So you end up having a loss. And for the first 2.5 months, they're covering your payroll. I don't see how you're going to have a loss, but it could happen. Or you have a side business that generates a loss. Well, under the old rules, if you had a loss, you can only carry net losses forward and only against 80% of income. The government has changed the rules here. Now, if you have a net operating loss or a net loss from your business and you're an LLC or something like that, or you can carry it back 5 years and get a refund for the last 5 years of taxes that you pay, or carry it forward indefinitely without that 80% limit. They've changed these net operating losses. If you're a corporation, it's a little different rules, but it's still beneficial. So be aware that they've improved the net operating losses. Now, some other good strategies. In today's era, it's a good idea to be prepared and maybe have some cash secure lines of credit. I have some lines of credit. You may want to have a line of credit yourself because this thing is going to get over. I mean, the virus is going to end at some point. So having a line of credit to keep you going might be something you might need or might want. I maintain myself at least 1 or 2 lines of credit. And here are some resources for getting lines of credit. Existing bank, competitive banks, ondeck.com, lendio.com, cabbage.com. All of these people are offering lines of credit. You should be aware of this. If you still need money, the government has waived a lot of penalties for withdrawals from IRAs. Now, you probably know that if you want to take out money from a 401k or an IRA, you basically can't do it penalty-free unless you're age 55 and a half. But the government has now waived that. If you are under 55 and a half, you can take up to $100,000 out from your 401k or from your IRA without penalty. Now, the catch is you will have to pay it, or you have to pay tax on the money over a 3-year period. You don't have to pay it all this year, so I made it a little bit easier, but you will have to pay tax on that $100,000 over a 3-year period. Or you can pay it back when things start improving and not have to worry about paying tax on it. So be aware of that, but this is a way of getting money, okay? A little extra money. Mortgage assistance. All right, the government has basically put a kibosh on mortgage foreclosures, rent payments foreclosures, things like that for 2 months. So there's now a waiver in most states about this, and the government has also put a lock on this. So if you have a problem, if for some reason you can't pay your mortgage, or you can't pay your rent, and as I said, the Payroll Protection Plan does cover rent, but if for some reason, if it's personal rent, like on your home, you can get work with your servicer and get a delay on that. So be aware of this. Refinancing mortgages to get money. That's another thing. You can get lower rates. A lot of rates now are way down as a result of the Fed reducing the rates to zero. Auto loan rates are way down. So if you have a truck loan or a car loan, refinancing now might save you a tremendous amount of money. One of the things I recommend in my book, Achieve Financial Freedom Big Time, I have a whole section here on how to save costs. Let me give you an example. I don't know if you realize this, but for every degree you turn up your thermostat in the summer or turn it down in the winter, you save roughly 7% on your utilities. Now, there is certainly a limit. It's kind of like an exponential curve here, but that generally works for the first couple degrees. So that's one way to save a tremendous amount of money. Buying in bulk. is another way to save us a tremendous amount of money versus buying individually. One of the things I do, and I never go into a store right now to buy food. And some of you may be doing that. If you are, you should know better. I get everything delivered. Now you might say, well, wait a minute, Sandy, I live in areas where it's very hard to get delivery. Bull. I can get delivery anywhere. There are all kinds of places that get delivery. For example, I get delivery from my local supermarket with Instacart. Here's the catch. I have to go on at 12:01 in order to get it, 12:01 a.m. in order to get on that list. There are various delivery services from Uber Eats or others that will deliver it to you. Most of the many restaurants will deliver, or they will do drop ship where you go in and they'll put it in your trunk. You order it in advance and then you drive away. You don't have to give them a credit card. You don't have to give them cash. You don't have to do anything. Even if you have, people, even if you want toilet paper, I even just got that on Amazon.com. If you do a search, you can find it. You don't need to go to a store. You really don't. I've never had to go to a store now in 3 weeks, and I never will while this thing is going on. So this is not dealing with tax. This is more financial and maybe more in your health, but I can tell you, you don't need to go into a store. I know there was someone here who went into Publix, one of our groceries, once. That's all she did, and she got the virus. So please take my advice over this, okay? Now, there are many other tax deductions that I can be talking about. In fact, that's what I normally talk about. Maybe next time I'll do a program with Jason on a home office deduction, what you need to do to qualify. There are certain rules, and that will be a good one, actually, for us to do, Jason, at some point.
Yeah, for sure.
You can do income shifting by hiring. There's ways to write off the equivalent of your kids' education and weddings. There's a lot of really good tax things that can save you a lot of money, especially in this time. Now, because of that, we have a special offer that we're offering you. I think you're going to like. We offer a TaxBot consulting service. Now, our consulting service does a lot of things. It has, number one, an expense tracking program called TaxBot, which has mileage and expense tracking for your business. And it's one of the easiest, most compliant ones around the country. We also has a voice device where you can put in your car, and you can actually, instead of having to go home and classify your expenses, you can do it while you're driving. You just dictate it into the device, which really is cool. You also get coaching with our staff. You get access to enrolled agents to help you maximize the strategies. You get access to our entire library. Now, this is normally only $1,200 a year, which, by the way, is tax deductible. So it only costs you about $800. But in addition to that, we're going to let you try it till May 15th, because you think you're going to like it a lot. I mean, there's all kinds of things that go on with this. Free seminars every month, and we bring on some of the top people around the country in a wide variety of services, a wide variety of things. So you can get it for free on May 15th. One way to do this is to go to taxbot.com and access this. Jason will give you a URL. It will be posted right now. You can go to Give Back, but he will give you a URL for you to go to this, and you'll get it till May 15th for free. Okay? And if you like it, you can keep it. If not, you can always cancel. And you're going to learn things like, how to write off the equivalent of your kids' education and weddings, how to turn your vehicle into a tax-deductible gold mine. We're going to get a lot more depth into the home office, what to do if you get an IRS audit, how to minimize the problems of an IRS audit, and a ton more. I mean, we get into all kinds of things. We just did one on Facebook marketing for people, how to maximize. We brought in one of the top experts in the country in this. So be aware of that. Again, you have until May 15th. Okay. I also want to remind you of my two books, Lower Your Taxes Big Time and Achieve Financial Freedom Big Time. You can get these on Amazon, Barnes & Noble, most bookstores, and it'll make your life a lot less taxing. Okay. We'll turn this back to Jason, and we'll continue wherever you'd like to go.
Awesome, Sandy. Thanks for all the information. Super helpful. Now, a quick word from one of our sponsors. This episode is sponsored by my free presentation for the Ketamine Academy. If you're tired of long hours, constantly being on call, or having to give up your nights, weekends, and holidays, all for an employer that only thinks of you as a productivity number that they're trying to maximize, then it's time to break free from the hospital grind, become your own boss, and finally take control of your professional trajectory. It's time you start your own practice. I know it sounds really scary, maybe even a little impossible. I get it. You got student loans, you're working tons of hours, and you may not even be a physician. Well, I am here to tell you that it's absolutely possible. Starting my own clinic was exactly exactly how I started my healthcare entrepreneur career. And there's one specific type of clinic that almost anybody can open. Ketamine therapy is one of the most promising treatments in the fight against depression, PTSD, and chronic pain that we've ever seen. And thousands of patients across the country are looking for clinics in their area. The problem is that there aren't enough yet, and these patients need someone like you to open a ketamine practice in your hometown. Go to ketamineacademy.com/presentation for a no-cost 60-minute training on how to gain more freedom by opening up your own clinic. On the presentation, you'll discover why opening your own private clinic is a better decision than working more overtime or going back to school for another degree, why this one specific niche clinic is the easiest to open and doesn't require a bunch of cash to start, and how anyone can open this type of clinic, even if you're not a physician, by just following a few simple steps. So to register for this free training, just go to ketamineacademy.com/presentation. Now let's get back to the show. We got a couple questions. So if you don't mind, we'll take a couple of those in the chat. So somebody was asking if you can get the PPP loan and the economic injury disaster loan, the free 10K. How does that work?
You can get both, but when you get the economic injury with the 10,000, it'll reduce the amount from the PPP. Just so you know, they will integrate. But at least the 10,000 comes immediately, whereas the PPP loan might take a while. So that's why I recommend you'd really go for both. And the economic injury disaster loan, you get, I mean, it's very easy. You can do it in your pajamas with your computer going to the SBA site. You don't have to go into a bank. Mm-hmm. You don't have to bring payroll records. You don't have to bring a financial statement. You don't have to bring your net income, showing what your net income was. You don't have to do any of that stuff. It's a much, much easier thing to get. I wouldn't go for the loan part of it. I would just do the grant. You want the grant part of it. For the loan, I would do the PPP. That's the bigger one. You get more. If you have a bigger practice, that's the bigger one. You get more money from it, and that's the one you want to go to. But I do want to mention, when you do go to a bank for that, you will want to bring proof of your payroll, your financial statement. If you're doing as a sole proprietor, you want to show what your net income was. You want to bring the appropriate records.
Awesome. Perfect. So PPP, you got to go into the bank with lots of records. The EIDL, you can just do it right online. And don't forget to click that box. There's a box in there that asks you if you want to be qualified for the free 10K, essentially, the 10K
That's
grant.
correct. Yeah. And there's no collateral, by the way. A lot of people, there's no collateral for any of these loans.
I got a question about the EIDL versus maximizing and getting that extra $600 in unemployment. Which would you recommend first? Because you could probably take advantage of both. You can do both.
Yeah, wow. Both. I like both. Isn't that a better answer? You can go get your unemployment and get the EIDL loan, or get the unemployment and the payroll protection loan. Do both. As long as you suffered, as long as you're not working and you suffered an injury, you might be even laid off, or you had to close your business, you can go for unemployment. And then at the same time, you can get the payroll protection loan and you get the EIDL, although it will integrate with the payroll protection. But you can get them all.
Awesome. So you have to be able to show some sort of a hardship or loss.
You have to show some loss. You're not going to be able to go for unemployment if you're still working and you're still making money.
Yeah.
All right. But you can get the EIDL if you had some loss of income, which I can't imagine you haven't had some loss.
And that counts for the entire year, some loss during this entire period of...
This entire period.
While they're calling it a disaster. So that started January 31st, I think, right? So,
that's correct. And all you have to do is solemnly swear you had some kind of loss. I mean, you don't even have to prove it.
Mm-hmm. Awesome. We've got a couple more questions here. If you, let's see, I might pop a couple of these right on the screen.
And by the way, I do want to emphasize the Midas initiative. There's a lot of tax benefits that healthcare professionals are not aware of. I mean, like, for example, how to write off your vacations anywhere in the world if you do it correctly. How to write off the equivalent of your kids' education and weddings. How to double deduct all the equipment you use in business twice. Imagine doing it twice. I mean, there's a lot of things that healthcare professionals are not aware of that haven't been told by their accountant that I think you need to be aware of. And then you can integrate this. That doesn't mean that you should be accountants, but you can take this information and then implement it with your accountant. And that's really the goal of it.
Yeah.
You're a financial person.
Exactly. And like the first chapter in this book, you talk about why everybody would be crazy not to have some sort of a business. So you know all the different tax advantages that you can get. So even if your business, so maybe you can talk about that for a quick second. What does your business have to do over a period of X number of years, like financially, in order to be considered a business versus a hobby? That's like the first thing I think some people would need to overcome so that it is a legitimate business for tax purposes, tax deduction.
Well, the government is subsidizing you with these tax benefits. There are tremendous tax breaks for small business that employees don't get. I mean, for example, you get a 20% of your net income you can not pay tax on, basically. You avoid tax on 20% of your income under the new Tax Reform Act. And you could set up a pension plan that makes any government plan look small by comparison, and all kinds of stuff you can do. So the government is subsidizing you with tax breaks. Now, when somebody subsidizes you, they want to make sure that you're a good bet. And one of the things they want to make sure of is that you're running your business like a business and not like a hobby. That's one of the important things. And by the way, in my book, in both books, actually, I have a chapter on that, on how to run your business like a business and not like a hobby, because it's such an important area. But the things that they look for is that you're really trying to make money. You're not operating it in a shady way. You're not saying, hey, I'm really a business and I'm not really doing much. You're really, really trying to make money. It doesn't mean you have to make money, because if you have a loss, you can use that loss against any form of income you have. You can now carry back the loss 5 years. I mean, you can carry it forward forever. So, I mean, you don't have to have a profit, but they want to make sure you're trying to make money. So let me give you I got a whole chapter on this, but I'll give you kind of a Dun & Bradstreet version of it. First of all, you want to have financial statements. Businesses have financial statements. Hobbies do not. Business people meet with experts about, if they're not making money, about what they can do to improve their business. Hobbies do not. Business people, if they're not making money, they try to make cuts. They ask their accountant to make suggestions as to where they can cut back that won't affect their business. Hobbies don't get that kind of advice. Business people have good marketing material. They go to seminars. They document that they went to training and things like that. Hobbies do not necessarily do those things. I mean, there's a whole bunch of criteria that IRS looks at in terms of whether you're running your business like a business, not like a hobby. If you're in a business, did you investigate the business? Did you look at alternatives? Or did you just sign up with the first person who said, oh, you should come here? I mean, they want to know that you're really trying to make money. How much time are you devoting to this versus your other endeavors? I mean, it doesn't have to be full time, but they want to know. Basically, are you using a good tracker? You know, a lot of times people ask me, what do you need to do to keep track of your mileage and your expenses? Answer, a good tracker. That's what IRS requires. That's not me. That's IRS requiring. Do you have a good tracker like TaxBot? If you want, you can just get that. You don't have to get the whole Midas. You can just get TaxBot. But I mean, these are the types of things that the IRS looks at as to whether you're running a business like a business versus a hobby.
Awesome. Great information. So Kimberly has a question that's sort of related to that. She's wondering, as it relates to the disaster assistance related to COVID, is there a certain income that your business has to make before it qualifies? Or is this for any business, even if it's a new business or a business that doesn't make much money? How does that work?
This will work as long as your business has been in existence, I think from January to February 28th or something like that. I mean, there's a time it had to have been in business. Uh-huh. But this will work for any business. Any business under 500 employees is the key.
Awesome.
So even though you have no employees, does it apply to you? Yes. Let's say you have 2 employees. Does it apply to you? Yes. Let's say you're an independent contractor. Yes.
Yeah.
Okay.
Perfect. So you talk in your book about receipts. So what are some of the common myths about keeping receipts for tracking your expenses and stuff like that? You mentioned something, dollar limit that's actually by the IRS is not actually required to show proof of a receipt. Yeah. If you don't mind talking about that real quick.
Well, it's interesting. I don't really like talking about this because people can tend to misinterpret what I'm saying or forget a little bit about what I'm saying. According to IRS regulations, you don't need a receipt for travel or entertainment if it's under $75. So if it's my suggestion, you do not have all your expenses be $74.99. Let's be honest here, okay? So you don't need a receipt if it's under $75. That's what it says in the regulations. But if you ever get it audited, you'll find the IRS agents like looking at receipts. It's just one thing they've been trained to do. Instead of having to argue with them, I would get a receipt for anything. One of the great things about a good tracker like TaxBot is that the receipt is very simple. You could take a picture of the receipt, which now IRS allows. They allow digital documentation. You can actually take a picture of the receipt and use that as your documentation. You don't have to worry about storing all this stuff. In fact, TaxBot goes one step further. If you get a receipt where you take a clear picture or you get an email, it will actually we have to have a patent now that we're applying for, actually try to read the receipt and put it in the appropriate categories of TaxBot, which is one of the only trackers that'll do that. So I recommend you try to keep receipts anyway, because you can just take a picture of it and do it that way. But if you lose one or you can't find one for whatever reason, you don't need it if it's under $75. But I wouldn't make it a habit of of throwing out receipts that are under $75. I wouldn't do that.
Yeah, exactly. And now it's so much easier. And and more reliable anyways to take a photo of it anyways and keep it electronically, because those what are those thermal papers? They just disappear after a while. The ink just comes out.
That's another reason why IRS allows digital documentation. All this thermal paper disappears and people get audited, and now you can't read the receipt.
Yeah.
Well, you have a hurricane like Hurricane Sandy. It was nice of them to name a hurricane after me. And the records floated away. And now what do you do? So this way, they now allow digital documentation. As long as you take a clear picture, that you can just keep it digitally. You don't need to keep all that paper.
Awesome. So if you were to give somebody advice on maybe like the top couple of things that they could do that the average small business person is missing to save money, what kind of direction would you point them in? And maybe the top two things that the average person seems to overlook where they could save substantially.
Well, the first thing I would do is get my book, Lower Your Taxes Big Time. That's really important. Or the option, just join Midas. When you join Midas, you'll get access to all my videos. You'll get consulting, coaching. You'll get all that stuff. A lot more than the book, in fact. In addition to that, give you a couple of tips. You probably learned that whenever you go to a training seminar, let's say you go to an out-of-town seminar for business training or for helping your business, you could deduct your expenses. But what's something your accountant probably didn't tell you is not only if it's an out-of-town business seminar that you went to, not only is your dry cleaning and laundry deductible, but as long as the clothing got soiled there, you may clean them anywhere. So your first dry cleaning bill you incur when you get back home is now 100% deductible. And I bet your accountant didn't tell you that one, folks.
Sure didn't.
So that's one. Another big strategy I like to use is income shifting. A lot of times people ask me, can I deduct my kids' education? No. Can I deduct their weddings? No. How about the video games for my kids? No. But if you were to hire your kids in your business to do some filing and bookkeeping and answer phones and miscellaneous things, are the wages that you pay an assistant in business deductible? And the answer is yes. And if they use that money to pay for their own college down the road or their own weddings, or aren't you in essence getting a deduction for those things? It's the same money, but you went from non-deductible tuition or weddings to deductible wages. I use this in my family. Everything I tell you, I do. I walk the walk. My daughter majored in digital design, which is basically web design with some animation. And she actually now works in the animation field, designs movies. But I wanted to get a good website for my firm. And these were pretty expensive. I wanted to get some bells and whistles, and I contacted a web firm. It was pretty expensive. So my daughter was a junior in college, and I asked her, can she do this website with the bells and whistles? And she said yes. I pay her something less than what the outside agency would have quoted me. So that shows it's reasonable. Mm-hmm. The amount I was able to pay her covered over 2 years of tuition. I was able to get the equivalent of a deduction for 2 years of college tuition plus some room and board. I mean, that saved me tens of thousands of dollars. If you're not doing this, you're overpaying your taxes. Another thing is pensions. There's a lot of really good pensions and profit sharing plans out there that you can be setting up and putting away a tremendous amount of money. But one of the better ones is something called a defined benefit pension plan, where instead of putting away a fixed amount of money, you basically say how much you want to receive when you retire. Let's say you want to receive $100,000 a year, $200,000 a year, and then you get an actuary. So it's a little more expensive than your normal pension plan. But the actuary, based on your age, and usually the older you are, the more you can put away, but based on your age, tells you how much you can put away, and you get that full deduction. Theoretically, the maximum amount you can put away is almost $225,000 a year. I mean, that's a big, big deal. And that's just three little things that we have in our Midas program and my videos and in my books and so on. I mean, there's all kinds of things. I've never met a healthcare professional whose taxes I couldn't cut by $10,000, $15,000. I haven't met one yet.
Awesome.
So there's a lot of things available.
Yeah, great information there. I have a question about paying a child or a spouse or something. Is there a certain limit where that math sort of works out? Because you do have to pay payroll taxes, right? So that would be them paying.
Well, that's interesting. Mm-hmm. You only have to pay payroll taxes if you're either incorporated mm-hmm. or if they're age 18 or older. If they are under 18 and you are not incorporated, there are no payroll taxes at all. If you are incorporated, you do have to pay payroll taxes. So I would probably limit the wages to keep them in roughly the 10 or 15% bracket, which is around, depends on whether they're single or married, but let's say it's going to be around maximum around $20,000 a year or so. That's what I was limited to, or maybe even 10, somewhere in that range. But even that, if they're in the 10% bracket and you're in the 35% bracket, you still save that 25% on your money there. So that's a really good thing to do. Not to mention the fact that you get credits now for the payroll taxes. You can defer them. I mean, there's a lot of good benefits here.
Yeah,
so I would
for sure.
Put them on the payroll.
Yeah. Awesome. Love it. Well, we're about out of time. So if you have any last words of wisdom on people, for people and business owners on what they should do, love to hear it. And then any way that's best contact information for you. So what's the best place to get a hold of you?
Best contact information is taxbot.com. You can get all the information on a Midas program, and you'll get a further URL that Jason will provide to you so you can get access to our Midas program for free until May 15th, by the way. If you just want TaxBot itself, which is the expense and mileage tracking application, you go to taxbot.com. There's a special discount. Normally it's $120 a year. You get it for $100 and you get 15 months instead of 12 months, but you have to go there. You can download it from any of the app stores if you want. You can do it that way and get a passcode from us to get 15 months. Don't forget my books, Achieve Financial Freedom Big Time, Lower Your Taxes Big Time. But the point is do something. Sitting there and doing nothing is really a dumb thing to do. Take advantage of the $10,000 giveaway by the government, by the Payroll Protection Plan. Take advantage of the free Midas program that is available to you. Take advantage of these things. You want to do something else? Get it in a fireproof safe? Fine, but do something. By doing something, you will save a tremendous amount of money, and you're going to make your life a lot less taxing.
Awesome. Love it, Sandy. Thank you so much for jumping on the podcast with us and doing this Facebook Live. Super helpful. Tons of great information. We really appreciate it. And I'm going to go ahead and sign off the live, and I'll just chat with you for a second afterward.
We hope you enjoyed this episode of the Healthcare Entrepreneur Academy. Want to connect with more like-minded healthcare entrepreneurs and professionals? Just head over to jasonduprat.com/group to join our Facebook family for real-time interactions, insight, and resources to get you one step closer to realizing your goal. We look forward to interacting with you, but until then, we'll catch you on the next episode of the Healthcare Entrepreneur Academy.